Hi, and welcome to the Stock Scores Market Minutes for February 13th, 2017. Before we get into the analysis and the trade of the week, let's talk this topic. Smart traders don't argue. Many traders do great analysis based on the information that they have. This can lead to compelling, well-founded arguments for where the market will go in the future. For example, I follow someone on Twitter who is very well informed, has great analysis, very compelling, and yet he's always wrong. If the market does not agree, these outlooks are simply wrong. Now, you can be right in theory, but if you are wrong in the market, you of course lose money. You cannot argue with the market. You need to wait for the market to agree with an idea and ultimately do what the market tells you to do. If I have an idea about where a stock or the market is going to go, I wait for the market to prove me right. I look for some signal that the market is agreeing with the smart argument. All right, let's get into this week's analysis. Here's the 30-day, 60-minute chart. Good week this week. We broke through that resistance level, which had held us up in very narrow volatility. We still don't have a lot of volatility, and volume, as you can see, is still quite light. So this is a sort of drift higher, not an enthusiastic run higher where the bulls are really aggressive. Nonetheless, it is a bullish short-term chart, as is the longer-term chart, also bullish. We are in an upward sloping channel. We're not really at the top of that channel, so we have more upside potential. I expect this market to continue higher. On the Russell 2000, it has been lagging over the last number of weeks, but this week it is breaking from this little flag pattern right there, and that should put it back into the upward trend and move up over the next few weeks. Canadian market kind of languished a little bit with some weakness in Canada, but generally speaking, it remains in a bullish trend longer term. Short term, it was kind of going sideways, but we had a little bit of a rally this week. Now we're back up to this resistance where I expect it will stall, and we'll see if it can ultimately break through that. It's got a little bit of work to do. However, as I said, on the long-term chart, we have good upward momentum. We're in an upward sloping channel. We're not really at the top of the channel. We can go up for a few more weeks until we hit that. So this remains a bull market. TSX Venture has had a good rebound the last 5 or 6 weeks. It is now coming near the highs from August of last year, where it should stall. I think it's got another week or two before it gets there. A lot of it depends on what happens with gold stocks because of the heavy weighting of the miners in this sector. But good chart, just realize it might run into some resistance soon. Treasuries, this of course is the US Treasury bond market, and it has been in a downward sloping channel for the last little while. It got pretty oversold here. It's now making its way back up to the downward trend line, where I expect it will roll over and move lower. Therefore, my outlook for US bonds is lower prices, which means higher interest rates. I don't think we're going to see it drop a lot. We're at pretty good support right there. So there's not a tremendous amount of upside in interest rates or a tremendous amount of downside in the bond market. At least until the downward trend line is broken, you should remain pessimistic on US bonds. US dollar has really ran away from its trend line. You can see the trend line there. It's working its way back. Could fall a little bit more before it finds support. This week we actually closed above the open, but I don't think it's conclusive that that is the beginning of the next leg to the upside. Could be. I'd like to see this little flag pattern get broken on the weekly. If that happens next week, then my expectation is the US dollar moves higher. But until it gets to support at that upward trend line, I don't expect it to have an enthusiastic bounce. On the gold, well, gold, of course, benefits from the weakness in the US dollar, which has had a little bit of. Now, in the longer term sense, we've got a downward trend line like this, and then we've also got one like this. This one was broken this week. That means a little more upside in gold, but the big picture is still it's fighting against pessimism that held up for much of last year. So do I think gold can go higher? Yes. Do I think the reward for risk trade-off here is great? Not really. You have to take a pretty short-term view because we have gone up considerably already, and the upside potential is going to be limited by that downward trend line. So stay bullish, but somewhat cautious. And on the oil side, there's the chart of the USO, which is an ETF that traces oil. You can see just incredibly low volatility right there. until this market can break up through that $12 level, I do not want to be a buyer of oil or oil stocks unless something specific to the company is good. But generally speaking, oil is in a sideways neutral pattern. Not particularly good, not particularly bad, just very choppy and difficult to trade. Fear, this is just a 30-day, 120-minute chart, and you can see that the VXX just continues to hit lows. It is telling us basically that there's not a lot of fear of a major correction being priced into the market. All right, so my outlook then, bullish on U.S. stocks, Canadian bullish as well. Canadian a little bit weaker than the U.S., but still good. Bullish short term in, I got this switched around. This should be bullish short term on gold, neutral longer term because we are rising into that downward trend line, and neutral in both time frames on oil. Markets continue to drift higher with the buying of large caps that really benefit from a changed tax regime, and that's the stocks that are leading. Many of the stocks in the market right now are actually lagging that strength of the indexes. There's light volume, there's not a lot of enthusiasm among the buyers. So you have to be picky and focus in on the abnormal stocks leading the way. Gold remains strong, but it is choppy. Oil has no direction. And as I said, fear is not a factor. All right, this week's trade of the week was one that I did on Monday. The reason the stock was on my watch list was the really abnormal volume that it was trading relative to the previous day, which of course was the Friday. It made a break from an ascending triangle pattern here on the 2-minute chart. That was my entry signal, 59 cents with a stop at 55. Closed the day at $1. That represented about a 10-to-1 reward for risk ratio. Good trade on an otherwise quiet day in the market, showing you that going after alpha, going after the stocks, trading abnormal volume is the way to go. Well, that has been the Stock Scores Market Minutes for February 13th, 2017. Have a great week in the market. Please subscribe to the channel, tell your friends, and like the video if you thought it was worth watching. Have a great week in the market and trade well.